I'm Charlotte McLeod with the Investing News Network, and here today with me is Rob McEwen, Chairman and Chief Owner of McEwen Mining. Thank you so much for joining me online today. It's great to see you as always.
Delighted to be on. Thank you, Charlotte.
Of course. Now, usually we start our conversations with gold, but today we're going to begin with copper. That's because McEwen Copper has just recently closed, I believe, an 81.85 million offering that's going to allow it to move forward at its Los Azules project in Argentina. So we first heard about McEwen Copper, I believe, about a year ago at this point. So I wondered if you could talk us through the path to raising this money, especially in a market where we know it's been a little bit tricky to get financing for some companies.
Sure. McEwen Copper, we decided with the copper price had gone up, the government was wanting to see more work done on the property. And so it was time to create a separate vehicle. It's still a subsidiary of McEwen Mining, but we plan to take it public in the first half of next year. So I was the lead order. I personally put in $40 million. And I thought, maybe naively, that'd be really easy to get the rest of the money. But it's proven to take a lot longer than I thought. There were, people saying it's Argentina, they're not sure about that. It was a remote site, and we are going to address that with the money. We now have 2 access routes, so we can get there year round. And it was a private placement. Well, I guess earlier, a couple of months ago, we got another 15 million in. We had conversations with a number of large miners in the base metal space, and they always wanted to do a bear hug on you. And we said, no, we're not ready for that. We think we can address some of the issues, and it'll be worth a lot more as we move along. So we had discussions. We're looking at a different way of processing the ore. In our PEA, which was done a couple of years earlier, we had looked at doing a mill and tailings, and we thought, well, that's a lot of capital up front. So how do we keep the capital down so it's credible that people could believe we could raise the money to build it ourselves? And so we'll be going with a heap leach for the first 13 to 18 years. And it uses less water, less power, less capital. So then we looked around and said, well, who's dealing in the heap leach program copper? And Rio Tinto has an exploration arm called Newton, or technology arm. And they claim that with their process, you can get the higher recoveries associated with a mill, but only at a heap leach, and the recoveries. So higher recovery, less capital, faster revenue generation. And we said, well, let's try that out. And as they looked at our deposit, they went, well, say, we'd like to have an interest in that. And we went back and forth a number of times, and we came up with what was announced yesterday.
Right. So it looks like you've got the money now, and it seems like based on this week's press release that the path forward is quite clear. You've laid out a number of things that are going to happen. There's drilling happening from, I believe, October of this year to June 2023, expecting an updated PEA in Q1 of next year and an IPO in the first half of 2023. So it seems like now things are going to start progressing quite quickly. I wondered how the activity lines up with what you see happening in terms of the copper cycle right now, where we're at.
Well, if you believe all the car manufacturers who are saying they're going to have all their production as electric vehicles by either 2030 or 2035, that's a source of demand that hasn't been in the market. You also have upgrading of the electrical grids that are quite old in Europe and North America. And then all of the energy, all the technology used to get energy from the renewable sources are heavy copper users. And most, if not all, the reports I've seen have been talking about a large deficit looming in the not too distant future. And you combine a deficit with the lengthening of the timelines to bring on production. Um, there's some very optimistic price forecasts for copper. So I think copper is the metal of electrification. And there's a lot of excitement about batteries and rare earths, but the heart of that is copper. And so I think we're very well positioned. We've got large copper exposure plus exposure to the ultimate form of wealth, gold. Um, but so I just think we're well positioned. Los Azules, um, in the preliminary economic assessment, looked at a 36-year life, um, a payback in under 4 years. And I keep thinking of it, I can't leave my gold route, so I often will convert everything to a gold equivalent. And Los Azules, if you took the indicated and inferred resources and converted them to a gold equivalent and the silver, you'd be looking at a 60 million ounce deposit equivalent. Based on the production forecast in the first 13 years, it'd be over 800,000 ounces a year at a cost of about $600 an ounce. And to me, that would make a pretty good gold deposit. So when I look at copper, I say, well, if it can deliver that, those are strong economics. I'm a big believer in the future. And earlier this year, I put another $15 million in to the company. So between McEwen Copper and McEwen Mining, I don't like to say this, but my investment in the company, cash out of my pocket, is greater than McEwen Mining's market cap right now.
Okay, that is very interesting. I do think that people like to hear that you're there along with them in your companies. So I would take that as a positive. On the copper side still, so we know that there's this electrification story. We need copper for that. Lots of people, as you mentioned, have high price forecasts. I do wonder, at the same time as we have those predictions happening, we also have, calls for recession, not just at the country level, but also potentially globally. And we often hear about copper as a bellwether for the economy. It's called Dr. Copper. So how do those different sides of the story balance out for you?
It's a good question because copper's been moving, it's come off its high. It almost reached $5 a pound and it's come down. And you wonder if what's happening, the tension between China and Taiwan. China took about 50% of the copper production. Their economy may slow down. If there was a recession worldwide, they'd lose a lot of their market, but they also have a large internal market, and they're still urbanizing, and copper is a large part of that. It seems there's nationalism going on around the world, and that's reducing the new copper coming on stream or investments in extending life of copper. I think right now with the Fed talking about interest rates going higher, the market getting a little spooked by that. You have to watch it closely. That our benefit is we have a large deposit, but it's also a low cost deposit. So that's a good combination to be large and low cost to survive a slowdown in the economy. I think we've got a project that it ranks amongst the top 10 undeveloped copper projects in the world, according to a number of sources. So, and there are a number of areas, several in the top 10 are unlikely to be developed in the near term because of where they're located.
Okay. So you mentioned what's going on with the Fed and how that has people a little bit spooked right now. So definitely, I think people are looking at inflation. They are hearing the Fed say that they want to keep raising rates. They're going to strongly keep trying to fight inflation. At the same time, definitely within the mining industry, there's a lot of skepticism about how far can the Fed actually get? What are we really going to see? Do you have any thoughts that you could share with us on where they might actually be going, especially we're approaching the next meeting in September?
Well, there was some talk of a half to 3/4 point raise coming in interest rates. They they unleashed a torrent of money, and not only the Federal Reserves, our government, the governments of the West and the East, in trying to combat COVID, and to stimulate the economy. And that is now coming back in, and it's been aggravated by the war in the Ukraine, and the logistics has been disrupted, and the disappearance of part of the workforce. So there's a lot of money chasing fewer goods. So I suspect we'll see inflation continue to rise, and central banks around the world are going to be looking to raise their interest rates to cool the economy. But right now we're seeing the dollar's attracting all sorts of attention because rates are higher. And that's been reflected in lower commodity prices around the world. Um, but I do suspect, I mean, we had in the late 70s, early 80s, interest rates went, Canada savings bonds had a 22% coupon on it in 1980. Um, Federal Reserve um, went up, they went up to 18%. Um, and gold climbed all through that period until it got to 18, 20%, and it came off. But I think too many people are looking at interest rates rising and saying that's negative for gold. I think it's very positive for gold. A lot of the speculative areas are being hit now because it's costing more to carry. It didn't cost anything before with interest rates close to zero. So higher rates, higher inflation. You want to have more gold. You want to have physical assets.
Okay, let's talk a little bit more about the gold angle, because I know that you have a positive long-term outlook for gold, but this year definitely I think people have been disappointed in its performance. They don't understand what's going on given all these factors that would seem to point to a higher gold price. So what words would you have for people who are feeling a little bit confused?
Hold on, maybe buy more. It's a buying opportunity. I mean, we are in one of the slowest weeks traditionally for the market during the year. I mean, just before the end of summer, you could look at around the Christmas holidays, the holiday season slows down. So there's a cyclical low right now. In September, October, you frequently see a rally. So this is like buying near the end when for picking up on the tax loss selling. It's not tax loss selling, it's just people frightened about the market or away and not paying any attention to the market. And a few people are pushing it down. I'd say you're seeing, at least in our case, our operations are improving. We had a bit of a recovery it looked like we were turning around in the second half of last year. And then we got into January and the first quarter, COVID hit us, some equipment failure, and all of our operations failed to deliver guidance. In the second quarter, two of our operations delivered on guidance, but there was one lagging. And that one now is working better. So I'm hoping that in the third quarter and the fourth quarter, we'll have all three operating, and we'll be executing some expansion plans there as well.
Okay, yeah. So you're talking about how things are improving throughout the course of this year. I wonder, so we have inflation going on, and the mining industry is not exempt from that. Companies are having to deal with higher prices. How has that been impacting the business for McEwen Mining? And maybe we could also talk more broadly how you're seeing inflation impact the industry as a whole, things companies are doing to make adjustments and succeed in this environment.
Well, one area that we're have a problem I think is common to the whole industry is labor. There's a high turnover rate taking place and a shortage of all sorts of skills. And that means that you're going to be paying more for those services. There's a lot of competition for labor right now. Consumables have all gone up because the supply chains have been disrupted, and also the industry was growing faster. Um, and then you have energy costs that everybody uses, and that it's more acute in an open pit mine. So yeah, so what are we doing? Trying to do it better, buying when we're buying our contracts are longer term to try to ensure that we don't get hit by an ever increasing rate of cost escalation. Um, and that's really, and as you said earlier on, turning to some, if we can find some innovations that lower our cost and get the job done faster, cheaper.
Okay, and I know that you also place quite a bit of emphasis on exploration, which is very important to, keep the industry going, and we don't always see that from the major mining companies. Is there anything you can say about exploration plans for the rest of the year?
We're going to keep drilling at our Timmins area. We're doing that to see if we can expand the resource base and bring down the payback period time on a preliminary economic assessment for our operations in the Timmins area, which we call the Fox Complex. And we're having success with that. I think we have we'll be spending this year about $18 million on exploration across all our operations. Also spending it in Nevada. And there's money being spent down in Argentina by our partner on our joint venture. We're quite encouraged by what we're seeing. We'll have resource updates for Los Azules, for Timmins, and Gold Bar, all in this this second half of the year. And the drilling's ongoing, so we'll still have exploration results coming out. And I'm trying to get our geologists to say, okay, this is a drill result. Here's the assay value, but what does it mean? Does it mean we've found more, or is it just a number you put out there and making everybody guess? Just trying to get them to be a little more imaginative.
Okay, well, we'll be looking forward to those results. I think that covers, I think, everything I wanted to cover this time around, but is there anything else, any final thoughts that you would leave the audience with on the company, on gold, on things you're seeing in the markets at the moment?
Given where our market cap is right now, investors were discouraged by the news over the last several years and have said, well, I'm not going to look at that company again. And I think they're making a mistake. If you look at, I'll say, the copper, which we started with, it's a very large asset. And in the province of San Juan, where Los Azules is located, you have, I think, two reference points for the value, potential value. One was the purchase by Lundin Mining in April of Jose Maria, a copper project a little north of us in San Juan province, and they paid $485 million for it. It has, its resource base is less than half of what ours is. Its grade is lower. It's higher altitude. We're at 31 to 3,600 meters. They're starting at around 4,000 meters and going higher. And there are two concerns there. One is you get closer to impacting adversely glaciers, and that's a hot topic in the country. And two, your machines and your people don't work as effectively at higher altitudes. Uh, we're also closer to infrastructure, highways, and roads. And so I use that, and that's close to $500 million. And then there's Philo, which they also have Lundin has an interest in, and it's at an even higher altitude. Um, and according to the published reserves and resources, it again is much smaller than Los Azules. Now, I have to say they pulled out some beautiful drill holes, and I think there's a good chance their reserves are going to go up, or their resources are going to increase substantially, and the grade of ore. But for the moment, in May they ran to, on the back of those drill holes, a value of 3.3 billion. Uh, they're currently about 2.2 billion. So I have those two reference points, same province, further from infrastructure, higher in the air. Um, so I said, well, what if we just discounted the value of Jose Maria by 50% and looked at McEwen's share, which is 68% of McEwen Mining. What's that worth on a per share of McEwen Mining? And that would be $3.48. And we're trading at around 3 US right now. So, but if you said, all right, it's a bigger deposit, bigger, better grade, could it be worth the same as Jose Maria? And then you're looking at almost $7 value behind every share of McEwen. And if you get carried away, get really optimistic and say, okay, it's twice as big, higher grade, closer to infrastructure, then you give it a 50% premium, you're up to a $10 value. So I just look at that and say, it's, I think there's a lot of value. And if we have some deep exploration targets we want to test and confirm. But the other number you're looking at is 2.2 billion. So I think there's a lot of value there, and the gold is definitely for free, that exposure at the current share price.
Okay. Okay. I think that's good information for investors to consider. And that sounds like a good place for us to wrap it up. So thank you so much once again for coming on to share the news of what's going on at McEwen Mining as well as McEwen Copper. We'll be looking forward to all the milestones that you mentioned.
Thank you, Charlotte. Be well.
Thank you as well. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Rob McEwen with McEwen Mining.